Singapore's latest move to tighten borrowing rules for property buyers took effect today. They include a total debt servicing ratio framework and tighter loan-to-value limits on housing loans. And property analysts say the new loan curbs could cause housing demand to fall by as much as 15% over the next few months.
By Saturday evening, all 738 units at private residential project J Gateway were snapped up. And at the Jewel, Buangkok's new condominium, 80% of its 350 units were sold. Property analysts say the new rules will not significantly affect genuine house hunters or those looking to upgrade from their HDB flats. But it's a different story for property investors looking to buy a second or third property.
Who will be affected are actually the so-called greater risk appetite investors. And I will not be surprised the volume of transactions are dipping by a good 10 to 15%. The 10 to 15% I'm expecting as an immediate reaction to the cooling measures. But in the long term, I think market will stabilize as people try to find, and I wouldn't say plan within the parameters that has been provided. And overall, probably a 5% dip in the market as some of these investors will be out of the opportunity to buy more properties.
Analysts say these latest measures will also close loopholes used by some investors to circumvent the existing rules.
The refinement of the LTV rules will make sure that the buyers will not be able to make use of the loopholes, such as using another person's name to avoid paying additional buyer's stamp duty or to secure a higher LTV. It also makes sure that they won't use another younger borrower's name to secure a longer loan period.
The Monetary Authority of Singapore says the move aims to encourage financial prudence and cool demand.
If you got a car now, of course, maybe with the 50% down payment or that, then and the car prices now, then of course more of your income will be locked up in your car. But if you got a first house, then if you're really stretching yourself, then you shouldn't really go for it.
MAS said any property loan should not push a borrower's total debt obligations to above 60% of his or her gross monthly income.